It is my great pleasure to speak to you today. Today is my first day as first earnings call as first earnings day as CEO of Infosys. It has been about 70 days since I started this journey as the Infosys CEO. We had a good quarter, but we will get to that in a minute. Over the last 70 days, I've had a chance to interact with several dozen partners, with a few hundred customers, and with a few tens of thousands of employees around the world. And the world that I see that we are emerging into is a world that is being fundamentally and massively reshaped by software and software technology. In this emerging world, we see that every business has a dual need in order to best serve and best deal with this transformation that they need to achieve. And that duality, on the one hand, has a great renewal that each business is embarking on, a renewal of their existing businesses, their existing systems, their existing landscapes, their existing processes, a renewal to achieve great operational efficiency and effectiveness, to make these systems and processes relevant for the world of tomorrow, to connect up their systems to mobile devices, to the social world, to sensors and to the Internet of Things, to connect the systems to analytics and big data for intelligent responsive behavior, and also to move and re-platform these systems to the cloud to achieve greater economic efficiency, benefits of scale. So in other words, a great renewal of their existing business to achieve much better operational efficiency as well as relevance of their existing systems to the emerging world. And each business that I talk to is complementing this great renewal with a completely new set of initiatives, a new set of things, a new set of systems, new businesses that they are going into, new ways of growing, new customers that they target, new business models, new ways of finding and reaching these customers and engaging with them. And this often requires getting into new business models, getting into new frontiers, but also building new kinds of systems to serve those needs. And this transformation with this duality of renew and new usually is based on a common fabric of education, of learning. In order to transform themselves, every business has to teach its workforce the new emerging world that they get into. And therefore, education and culture and learning and ways of engaging with employees ends up being at the heart of the transformation of every company. We at Infosys see a tremendous opportunity in this paradigm, in this world that we are emerging into. Of course, we at Infosys have to ourselves deal with this duality of, on the one hand, renewing our existing services, and on the other hand, complementing that with new kinds of services that we offer. On the one hand, renewing our existing systems and processes, and on the other hand, developing new systems and new processes and new ways of working. And to do so again on the basis of our own common fabric of our culture, our values, and especially our education. Education has been at the heart of Infosys since our founding. Mr. Murthy used to call this learnability as the key capability that we have, the ability to learn. We see that also as our focus, a key focus going forward. So we are embarking on a journey to renew our existing work. Each of our services will be renewed on the basis of innovation, on the basis of new technologies like automation, artificial intelligence-based technologies. Our services like BPO will see a massive embrace of artificial intelligence techniques, of automation, and using that to deliver great business outcomes, to deliver great business performance and process improvements and process innovation for our clients. And we see that as an opportunity to help rethink the way business process management has been done. We also see automation and artificial intelligence impacting our other services like IMS in a very deep way. Infrastructure management can be dramatically improved through the use of automation and artificial intelligence techniques. Similarly, verification, the IVS capability. We believe that consulting can be redesigned and rethought around a deep understanding of business processes and business process expertise, as well as with the power of design thinking to help our clients enter into new worlds. In other words, we see a renewal of every service that Infosys offers. And we also see a renewal of our existing processes, from sales and marketing, new ways of engaging with customers and working with them, achieving much better operational efficiency in the way that we do our sales process, the way that we engage with our employees, and our own systems and processes. And we complement this renewal of our services that we offer, as well as our internal systems and processes, with new sets of capabilities that we bring in. We are starting to see extremely encouraging and exciting results in our work with clients on big data, on deep analytics, on data science, on using open source technologies and other proprietary technologies from our partners to bring together incredible cost performance improvements and a performance of great scale for our clients. We are starting to see the first encouraging results of this already. We are also doing a massive embrace of AI, artificial intelligence, in our own capabilities and applications that we deliver, and building new kinds of applications for our clients. And we are also seeing an embrace of new techniques like design thinking to help customers think about new areas with rapid prototyping and incremental iterations, and thinking through how to approach new areas and build new systems for these. So we see our own renewal and our own augmentation of our renewal with new capabilities, and doing so on the basis of our education, our culture, and the way that we work with our employees. We believe that on the basis of this, there can be a next generation services company that we can transform into. We used to be one. Infosys was founded on this notion, on this dream, on an idea of a next generation services company with a global delivery model and pioneering things that our founders did. Mr. Murthy always talked about consistent profitable growth and a great vision, and we believe that we can get back to that consistent profitable growth as well as achieve great growth, and once again becoming a bellwether of the Indian IT industry. I look forward to helping lead such an Infosys, which can grow significantly as well as achieve great profitability. And we believe that we can be a leading example of such an innovative next generation services company. A lot of people say that you are talking about artificial intelligence and automation, and that this somehow makes our humanity less relevant. I believe that at our heart, we are a deeply human company. I have my own education in artificial intelligence. I believe that automation, and this argument goes back centuries to the Industrial Revolution. I believe that automation has always served to amplify our ability, and AI techniques will continue to do that. I see an Infosys that is dramatically amplified with the power of our people who are enhanced and augmented with these great technologies, great automation, and how that helps to serve the great needs of the future, a great human revolution, in other words. Professor Mashelkar used to say something that I believe is a credo for us as we look at the road ahead for Infosys. We must do more with less for more. We are looking forward to transforming ourselves into such an Infosys, one that is innovative, one that is agile and responsive, one that is an incredibly exciting place to work in. And we already see signs of this coming this quarter. Let me turn my attention now to our quarter. We had a very good quarter. We had a very exciting quarter. We achieved 3.9% growth quarter over quarter on constant currency, 4.5% in rupee, and 3.1% in as reported in dollar terms. We also achieved in the services business alone 3.6% growth in reported currency and 4.4% growth in constant currency. Our Finacle business did not have such a great quarter, and we have made a leadership change there with the addition of Michael Ray as the new head of Finacle. Our operating margins in the quarter went up by 100 basis points quarter over quarter to 26.1%. This despite several one-time charges that Rajiv will talk about. We had a great performance, and on the basis of this, we have given a 100% variable bonus to all our employees. In other words, we are starting to see the signs of first success from the strategy that I have outlined. To talk further about the achievements that we had in the quarter, I would like to invite my friend Rajiv, our CFO, to talk about the quarter.
Thank you, Vishal. I'll spend 5 minutes on taking you through the financial highlights. As Vishal mentioned, our revenues for the quarter grew by 3.9% on constant currency basis and 3.1% on reported currency basis. In rupee terms, our revenues grew by 4.5%. During the quarter, major global currencies depreciated against the US dollar, euro, Australian dollar, GBP for example, depreciated by 3.8%, 1.7%, 1.5% respectively, which had an impact of about $16 million on our reported numbers. On margin front, rupee depreciated by 1.3% against the dollar, which resulted in a positive impact of 0.3% on our operating margins. The increase in operating margin was primarily driven by 2.2% increase in utilization. Utilization is at an all-time high of 82.3% as against 80.1% last quarter. An improvement in on-site effort mix, it went down from 29.2 in the previous quarter to 28.7 in the current quarter. As Vishal mentioned, the expansion in margin is after having made significant investments in the business during the quarter. This was a quarter where we promoted 12,000 employees, the highest that we have seen in any single quarter in the history. We are paying 100% bonus to our employees. We have provided for 100% bonus for our employees during the quarter. This is after a long period of time. And we have also increased our investments in sales, customer delivery, education and training, and other areas. During the quarter, we have contributed 77 crores to Infosys Foundation for CSR activities, which takes our number for the half year to 125 crores. Our other income for the quarter was 877 crores, which included a forex gain of 148 crores. Our effective tax rate for the quarter is at 29%. The cash and cash equivalents for as of September 30th is at 33,616 crores. The board has declared an interim dividend of rupees 30 per share. The record date for interim dividend is October 17th. The Infosys board has also approved a 1:1 bonus equity issue of equity share and 1:1 stock dividend of America Depository shares to increase the liquidity of its shares and expand its retail shareholder base. On the outlook for FY15, the guidance for the year has been maintained at 7 to 9%. In the last few months, you have seen the currency markets being extremely volatile, and most of the major global currencies have depreciated against the US dollar. For example, the euro has depreciated by 8.8% against US dollar between March and September. The Australian dollar has depreciated by about 6% and Swiss franc by about 8%. In spite of all the depreciation of global currency against the dollar, we have kept the guidance at 7 to 9%. On the margin front, we have seen an expansion in the margins during the quarter on account of strong operational performance. However, historically, Q3 and Q4 are weak quarters. We continue to make substantial investments in our business to accelerate and sustain the growth, and I would expect the margins to be in the narrow band of about 25% plus minus 1% for the whole year. It may vary quarter on quarter depending on the needs for making investments. With that, I'll open it for questions.
How comfortable are you in terms of guidance, considering H2 is sort of weak, and also, is there some sort of
On the capital allocation question, I will defer to my friend Rajiv. On the second half, we do see that the currency fluctuations have created an atmosphere where some companies have revised their guidance downwards. However, we continue to hold our guidance, and historically Q3 and Q4 have been weak quarters, but we continue to hold our guidance and that we had offered at the beginning of the year.
On capital allocation, as we had communicated in the earlier interaction with the investors, I think Vishal coming in new has given a new lease of life to the company. I think people we are already seeing in our performance during the quarter. I think there's a lot of work to be done. Vishal is laying out his high-level vision and strategy for the company. Once he has articulated his strategy, we'll detail it out in terms of our business plan and financial plans over the next 1 or 2 quarters. And I would say only after we have actually looked at detailed business plan and financial plan based on the strategy and vision, we will be in a better position to come and talk about the capital allocation. So I think the right time frame for that would be sometime around April. Until then, I think we have to focus on investing back in the business and fulfill the dream that we have of where we want to take this company.
Dr. Sikka, hi, this is Rukmini Rao from Bloomberg TV. You just spoke about the way you're looking to change the way Infosys is doing business. Would this mean that there'll be changes in the top management as well that we can look forward to in the coming days? And also given the fact that, has there been a concrete plan as far as your cash utilization goes? Because you have been talking about that and all of us were anticipating you'll give us the roadmap ahead for how you're going to utilize the huge pile of cash that you're sitting on right now. Thank you.
So with regard to the management team, this is my first quarter working with the management team. It has been a very exciting quarter. It has been great to work with the management team. We are very fortunate to have a young, dynamic and a very passionate management team, and it has been very excited to work with everyone. Of course, you know, you always continually make changes. This is why we are here. You saw the change that we made in Finacle, and as necessary we will make adjustments and so forth, but I see no structural reasons to make any changes at this point. We have just started to click and gel together. You see Praveen, Rajiv, Tan and I here, and all of our segment heads and leaders are on an incredibly exciting and journey and are very passionate about it. And on the cash, perhaps Rajiv can talk about this. We are in the process of I have articulated a high-level strategy today, and I will continue to do that during the course of the day. Over the next 1 to 2 quarters, we will make more precise and objective, quantitative measurements out of this for what our business plan over the next few years is going to be, and how we change things, how we make allocations, how we make adjustments to our investments, and what that means in terms of our guidance for the business and so forth. All that will come over the next 1 to 2 quarters or so. But we do see that we are designing the company, as you can see, and rethinking and reinventing ourselves around a strategy that is driven by innovation, a strategy that is driven by growth, a strategy that is driven by bringing a massive embrace of new technologies, new processes into the company. And therefore, we believe that that the management has to wait and see how we can take advantage of the cash that we have towards these purposes of innovation and growth. We'll have more to say about this, I would say, in the April timeframe. But Rajiv, perhaps you can add more to that.
No, I think as I answered in the previous question what Vishal said, I think the right time for it would be sometime in April. I think we have a lot of work to do. You know, Vishal has laid out a high-level strategy, and he'll be talking about it through the day. I think we have our task cut out in the next 1 or 2 quarters to come out with the execution strategy, detailed business plans, the cash requirement to fulfill that business case and the dream that we have. And only after that we'll be able to say exactly what we are going to do with this cash and the capital deployment.
So from NDTV Profit, so how would you maintain the balance between focusing on bread and butter business and focusing on the next gen thing like digital, etc.?
Some time ago I had an interview where I impromptu said this line, and I would like to re-invoke that line. Without one, we are just dreamers, and without the other, we are just grinders. So we have to be able to walk and chew gum at the same time, and we must do both.
Hi Vishal, I see you've had a good quarter so far, but you know, when it comes to dealing with competition, I'm sure the long-term target for you is to ensure that Infosys gets back to you know, growing in line with peers or even outpacing peers. How will you really pick and choose battles? Which area, you know, can Infosys really choose to up the ante? Secondly, the initiatives that you mentioned, what would it mean in terms of reallocation of resources? Will you have to let go of people who don't have these skills? And will you also increase budgets for training going forward?
So, let me start. So, yes, we will increase the budget for training going forward. We are massively working on massively enhancing our ability to train and educate people. We believe that this is at the heart of what we do in the company. On my first night as CEO, I went to our Mysore campus and I asked our head of education. It is an incredibly beautiful place, an extremely inspiring place where our young trainees come for the first time. That is at the heart of what we do in the company. See, 20 years ago, there was no BPO or IMS. These capabilities, these services did not exist, but we still had education. 10, 15 years from now, who knows what kinds of services we are offering, but we will still have education. So, education is a timeless thing. It is at the heart of what we do. And when I went there and I asked our head of education, how long does it take us to put together a class for something completely new? And he told me, he had just done this for a new technology, that between 8 weeks and 3 months. Now, if you think about this, our ability to train ourselves on any new technology under the sun in a massive way, we can train 16,000 people in parallel in our Mysore facility on something that we had no idea about within 2 to 3 months is an incredible capability, and we are going to invest heavily into that because we believe that is at the heart of our growth in the future. To your other question about competition, I fundamentally believe that there is a previous generation way of doing services, a previous generation set of services, which were primarily driven around costs, around staff augmentation, around labor arbitrage, around efficiency and how fast you can recruit and how many people you can recruit and how you can jam them down a supply chain of clients. I believe that is the wrong direction for the company. I believe there is a better direction for services companies, one that is driven by innovation. So, which area will I choose to up the ante on, Chandra? It is innovation. It is bringing massively artificial intelligence, automation, new platform efforts in big data and machine learning, data science and so forth, and investing in that, in renewing ourselves in that. Each one of Infosians around the world goes through continuously retraining. We believe that we can reskill people for this new generation, and wherever we cannot, we will augment ourselves with new talent, with new capabilities and so forth. But we are not interested in the way the services business used to be. None of our clients is increasingly interested in the way the services business used to be. We are interested in a new kind of a services company, one that dramatically amplifies human potential with technology, with automation, and that can bring great innovation to life at clients, both in their existing areas and in completely new unprecedented areas. And that is what we are helping to rebuild the company towards.
What sort of grace period would you expect from investors for all that you mentioned?
I think that the earliest signs, the first earliest signs are here, as you can see in the results in the quarter, but this is going to be a long journey. When Mr. Murthy started, he had talked about a 3-year roadmap. We are about 1 year, 1.25 years into that. So, I would expect the next 2 to 3 years to start to see the results of this in a meaningful and a big way.
Hello, Mr. Sikka. This is Aarti from Z Business. My question to you would be that you have added 49 clients as to what we see. On that note, I would like to ask you as to has that client addition happened on a higher rate, and also if you could throw light on your US business as well.
Yes, the client business, the client addition is increasing. We have had some very exciting, we have 6 very large deals that we have signed in the quarter. We are starting to see the first signs of engagement with clients, an extreme amount of interest in these new areas that I have talked about, but it is still very early. In terms of the US business, yes, the US business did grow 3.1%, and Rajiv and Praveen can add to that. Perhaps you can answer the question on the US business.
Yeah. Our US business grew by 3.1%. In general, we are seeing a lot of optimism in the US business. We have seen growth across verticals. We have seen good growth in manufacturing, primarily in high-tech and automobile space. and industrial manufacturing, and in telecom we have had a excellent growth. And financial services, we had probably more growth in Europe than in US. But most of the verticals, I think our growth in US has been better than in Europe. At the same time, we are also seeing signs of weakness in a couple of verticals. One is retail and CPG. We are seeing some challenges. We have seen some postponements of decisions. We have seen some cancellations of projects. So that sector continues to remain weak. While telecom in the first half has had a fantastic run, we expect in the second half it may be muted because there is a lot of merger and consolidation happening in that space. Both wireline and on the wireless side, there is a lot of pressure on top line. So there is a lot of pressure on costs as well. So we expect, while the telecom has been extremely good in the first half, we expect it to be a little bit muted in the second half. But otherwise, by and large, I think US has been pretty good for us this quarter.
And I would say the 7 large deals that I mentioned with a total TCV of around $600 million, 5 of these were in the US.
Thanks a lot. This is for CNBC Awaaz. How many can you elaborate on deal wins in this quarter in terms of the total contract value? And also your realization has improved this quarter after a 2-quarter decline. Can it sustain?
Large deal, we had a total TCV in this quarter of 511 million. As Vishal said, we had 6 large deal wins this quarter, total TCV of 511 million.
And on the realization, I think you should not read too much into quarter-to-quarter numbers. The fact is, there are many things which go into the realized revenue per employee. It could be the productivity, the business mix, the client mix, the project mix. I think what we would say is the pricing is stable. Pricing continues to be stable. I think there's a lot of focus on productivity improvements and automation, and that will probably help us realize more revenue per employee. But I think pricing environment continues to be stable. On the large outsourcing deals, we do see pricing pressures depending on the competition. But I think other than that, I would say the pricing continues to be stable.
Yeah.